money. Bitcoin's digital sound money. And I think that what's going on there is you're just seeing more and more people becoming aware of the fiscal and debt problems that the world has and looking for an escape hatch. Gold's one and Bitcoin's another. Turns out Bitcoin has performed better than gold. So
hey guys, welcome back to Everyday Finance. In this video, Larry Lepard discusses Bitcoin and crypto, confident in its long-term performance, expecting it to continue outperforming and reaching higher levels by the end of this year and next. However, in the short term, it remains highly volatile and can fluctuate unpredictably. Lawrence believes that the current situation in Bitcoin is similar to the enduring value of gold, which has been considered a reliable form of currency for thousands of years. However, Bitcoin has emerged as a new and digital form of sound money. Bitcoin is considered a form of digital currency that is gaining attention. It appears that an increasing number of individuals are becoming aware of the financial and debt issues that exist globally and are seeking a way out. It's interesting to note that Bitcoin has outperformed gold, which seems to attract younger individuals who are more inclined towards Bitcoin, and lots of things Larry Lepard discusses. So please watch the video to end, and share this video, and subscribe our channel, Everyday Finance. Thanks.
I mean, long term, I'm highly confident that it will continue to outperform and be much higher. And by that, I mean by the end of this year, next year, the following year. Short term, it could do anything it wants. As you know, it's quite volatile. I think what's going on in Bitcoin is just the knowledge, very much like gold. I mean, and I do consider, gold is 5,000-year-old money, it's the soundest form of money ever until Bitcoin came along. And it's analog sound money. Bitcoin's digital sound money. And I think that what's going on there is you're just seeing more and more people becoming aware of the fiscal and debt problems that the world has and looking for an escape hatch. Gold's one and Bitcoin's another. Turns out Bitcoin has performed better than gold. So, younger people tend to aggressively go towards Bitcoin. But as you point out, it has been correlated with the NASDAQ. It has been correlated with risk on, and it does tend to have pretty wide swings. And so it's not suited for everybody. There are people who, prefer not to have the volatility, and they might, and they're looking for a sound alternative. They might choose gold. In turn, if you're looking for the most rapid growth on a performance basis, Bitcoin has clearly been the better choice for the last 10 or 15 years, and I think it will continue to be a better choice. So, but it's come along too. And to me, as I said, I think earlier, these are both the canaries in the coal mine. The fact that they are both up as big as they are, Bitcoin's up 66% in the quarter. Oh my goodness, that's a big number. Gold was up now 13 or 14% in the quarter. That's a good number too. Just annualize those are huge numbers. So something's going on here. The fact they're both up together and the stock market wasn't up that much. Something's going on here. And what I submit is going on is a larger percentage of the world is becoming aware of the monetary problems that are about to emerge because the Fed is trapped. And I think at the end of the day, they can say they're going to go higher, they can say they're going to go lower, they can talk all they want, they can jawbone, they do all kinds of things, they lie about what they're doing. But at the end of the day, if push comes to shove and the choices are do nothing and let the system collapse, or print money and create new programs to accommodate the system and dilute the value of the dollar through debasement, the politicians, they will always choose option two, because as we saw in 08, in 2020, in 2019 with the repo blowout, in March of 2023 with Silicon Valley Bank, they are not going to let the system collapse. Full stop. They can't. They just won't do it. But what makes it so hard for all of us is they tend to, in the interim periods, they tend to talk tough and, imply that, oh, they've got it all under control and we're going back to 2% and da-da-da-da. But, again, I think what's going on is gold and Bitcoin are saying bullshit. You guys can say all that stuff. Yeah, we hear you. That's what you're saying for sure. But you know what? Bullshit. We don't believe it. We'll take the gold and Bitcoin. Thank you very much.
I want to learn more about your intermediate and long-term Bitcoin thesis. First, let's talk about the halving today. Why did the price move up?
Well, the halving, again, at the end of the day, you know, the block reward, whether it's 6.25 or 3.125, you know, I mean, it's the difference between 900 Bitcoin a day and like 450 Bitcoin. It's not that's not the biggest determinant of demand, in my view, you know, of supply and demand in the market. That's a small number compared to the 19 million coins that are out there. It has an impact, and historically, there's always been a price run after a halving. If you look back historically. So I fully expect we will have a price run. But if you actually also look back carefully, you'll see that in some of the prior halvings, it actually went down for a little bit before that price run began. It took a while. There was like a lag effect for the halving to have an effect on the price. And so it's entirely possible to me that that would occur again in this particular time frame. As I said, Bitcoin's a wild animal, and you just don't know on any given week, day, month what it's going to do. I mean, it could go to 50. It could go to 80. I mean, I have no idea. I will say this. I will say this, though. I have great confidence that in a year or two, it's going to be much higher than it is today.
Now, onto a thrilling development in the cryptocurrency realm, the recent approval of the very first Bitcoin ETF, a noteworthy achievement. This development not only validates Bitcoin for skeptics, but also opens the doors for significant institutional investments in this asset class. Lawrence emphasized the importance of influential firms such as BlackRock, which have shifted from skepticism to actively endorsing Bitcoin investments. This helps to provide a clearer understanding of the situation. The market cap of Bitcoin today is in the trillions, which is quite impressive. However, when compared to the multi-trillion-dollar realms of traditional financial assets like stocks, bonds, and currencies, it still remains relatively minuscule. The difference between these two factors indicates a great opportunity for expansion. Even a small adjustment in the allocation of traditional assets towards Bitcoin could lead to substantial growth in its market capitalization. It is important to consider that as Bitcoin becomes more intertwined with the financial industry, its potential for increased valuation becomes more concrete. This is particularly evident when comparing it to traditional assets that are susceptible to inflation and other economic risks. Let's back to the Larry Lepard interview.
But I don't think it's a guarantee. I mean, so I agree that the ETF launch is a really big deal. I mean, it allows a huge pool of capital that could not easily buy Bitcoin to now buy Bitcoin. So, you know, I mean, to be honest with you, I'll give you the spread. I mean, to my way of seeing end of calendar 2024, we could be at 100, we could be at 300. I have no idea. I doubt we're below 100. I highly doubt that. That's, you know, from 60, that's a 40% move or a little higher. That should be pretty easy, you know, 50% move. That should be pretty easy from here. To their number of 2025, 250, yeah, that sounds possible. You know, it's very hard to know. It really is. And there are a lot of models, there are a lot of ways of looking at it. I look at them all, you know, I weigh them all, and then I'd say, you know what, it's a new thing. I think Michael Saylor said all your models are broken. I think he's kind of right. We just don't really know how it's going to behave. I mean, it would not surprise me at all if it shot up to 250 quickly, but it also wouldn't surprise me if, you know, a year from now we were only at 110. I mean, it's just, you just don't know. Well, see, that's yeah. So one of the things I think a lot of people have said they're very correlated. And if you look backwards, there has been a certain amount of correlation. It trades like a risk asset, but I do believe that over time that's diminishing, and I think over time they will completely separate, where you could actually have the NASDAQ not doing well and Bitcoin doing well. But Bitcoin's a measure of liquidity, and the NASDAQ is tied to liquidity as well. So it's going to take time for the two to separate. But I do believe over time they will separate. But, you know, if they print a lot more money, I mean, my new base case, I've kind of revised this. I used to think we were going to have quite a big market downturn and quite a big recession. I'm actually, and maybe we will, you know, I'll be wrong again, but I'm now, based on what I'm seeing, I'm now kind of starting to think, you know what, we're actually not going to have that big a downturn, that big a recession. We're going to have a pretty hot economy. It's going to be pretty healthy. The stock market could go higher. You know, there'll be a lot of good things happening with one exception. We're going to have serious inflation. You know, because they're going to have to grease the monetary skids. The velocity is going to pick up. And with those changes, you know, there's no way you get out of this inflationary trap. And so it's entirely possible that the Fed ultimately starts thinking maybe they have to hike rates further. I don't know that they'll do that. But, as you pointed out earlier, they've certainly backpedaled from a lot of rate cuts to very few rate cuts based on the strength of the economy. And so the new data that we all have, because we kind of all thought there's got to be a recession coming here, and there hasn't been in a big way yet, right?
Lawrence compared the creation of Bitcoin to significant historical innovations, such as the printing press or the internet. Due to its unique feature of digital scarcity, Bitcoin stands out from traditional financial assets. With a fixed supply of 21 million coins, it offers a new perspective on economic scarcity and serves as a stable store of value in the long run. As more investors grasp the fundamental properties of Bitcoin, its adoption and value are likely to keep rising. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.